Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far 7 problems I have completed on this topic of CVP analysis. Now in this video I'm continuing from 8th to 13th problem I'm going to cover up in this video. So if you want the complete command on this topic of CVP analysis, watch the video till the end. Don't skip in between. Always keep a notebook, a calculator, a pen beside you, because all the problems are based on the formula. If you are perfect on the formula, then only you can be able to solve the problems on CVP analysis. And the problems are based on the theory, which I have explained in the first 4 videos. So don't forget to watch the first 4 videos. Without that, you cannot be able to understand now. If you have not watched, I suggest you go to the playlist of my channel, select the subject Financial Decision Making 2. Select the videos of CVP analysis. Be thorough on the concept and formula, then only you can continue. Now before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the answers from problem number 8, then I'll explain. Now, see the 8th problem. From the following data, calculate the break-even point. We are given the information: selling price per unit 20 rupees, direct material cost per unit 8 rupees, direct labor cost per unit 2 rupees, direct expenses per unit 2 rupees, variable overhead per unit 3 rupees. See here, variable cost is not given in the problem. You have to remember, variable cost consists of direct material, direct labor, direct expenses and variable overhead. If you add up all these 4 items, you will get the variable cost per unit. And the fixed overheads total rupees 20,000. If sales are 20% above break-even point, determine the net profit. So 2 different questions are there. The first question, you have to calculate the BEP. Second question, you have to calculate what is the profit if the actual sales are 20% more than BEP. So first of all, selling price per unit is given 20 rupees. Variable cost per unit directly not given. So we will calculate direct material 8 rupees, direct labor 2 rupees, direct expense 2 rupees, variable overhead 3 rupees, total 15. So we got 15 rupees variable cost per unit. And the fixed overheads are given 20,000. Already in the so many problems, we have applied the formula for BEP in units. Fixed cost divided by SP per unit minus VC per unit. So fixed cost 20,000, SP 20 rupees, VC 15 rupees. 20 minus 15, 4,000 units. So we got the BEP 4,000 units. First question completed. If you want BEP in rupees, then easily you can find out BEP in rupees by multiplying BEP in units into selling price per unit. So 4,000 units into 20 rupees, 80,000 rupees is the BEP in rupees. That's it. So first part completed. Second part. If sales are 20% above break-even point, profit is equal to how much? So presently the BEP is at 4,000 units, but the actual sales are 20% above BEP. Because at the BEP, there is neither profit nor loss. No profit, no loss at BEP of 4,000. The profit will arise whenever sales are more than 4,000 units. So here, sales are 20% above BEP. So 20% of 4,000, you will get 800. So 4,000 plus 800, so 4,800 units are sold. So what is the profit if 4,800 units are sold? So first we take the sales. 4,800 units into what is the selling price per unit? 20 rupees. So 4,800 into 20, 96,000 sales minus variable cost. We are making 4,800 units and each unit variable cost is 15 rupees. So 4,800 into 15, 72,000. So sales minus variable cost, we will get the contribution. So contribution we got 24,000. From contribution, if we deduct fixed cost, we will get the profit. The fixed cost is 20,000. So 24,000 minus 20,000, 4,000 profit. So if sales are 20% above the break-even point, we are going to get a profit of 4,000 rupees. That's it. Next, ninth problem. You are required to calculate break-even point from the following information. Fixed cost 80,000 rupees, variable cost per unit 4 rupees, estimated sales 2 lakh, selling price per unit 20 rupees. By mistake, it is misprinted as 2 rupees. So in the problem, make it 20. The selling price 20 rupees. So simply we have to find out the BEP. That's it. The fixed cost 80,000, selling price per unit 20 rupees, variable cost per unit 4 rupees, and estimated sales 2 lakh. We don't require estimated sales because in the problem it is asking you to calculate BEP in units. The BEP in units is equal to fixed cost divided by SP minus VC. So 80,000 divided by 20 minus 4, 16 is 5,000 units. So we got the BEP 5,000 units. Now we need BEP in rupees. So BEP in rupees is equal to BEP in units into selling price per unit. So 5,000 units into 20 rupees will get 1 lakh. This is the BEP in rupees. So ninth problem completed. Now come to the 10th problem. You are given the following data for the year 1978 of X company. Variable cost 6 lakh, fixed cost 3 lakh, net profit 1 lakh. Actually, variable cost and fixed cost, if you add up, you will get the total cost. And to total cost, if you add profit, we will get the sales. So it is not specified, but it is indirectly known that sales are rupees 10 lakh. So we are given the complete information. Variable cost 6 lakh, fixed cost 3 lakh, net profit 1 lakh, sales are 10 lakh. The percentages are given. We don't require the percentage. Now find out break-even point, PV ratio, and margin of safety. So 3 items we have to calculate one by one. Variable cost 6 lakh, fixed cost 3 lakh, profit 1 lakh, sales are 10 lakh. This is the information given. Now BEP. Different formulas are there for calculating BEP. We'll get the same answer. We have to see what is the information given in the problem. Accordingly, we have to apply that formula. So here conveniently we can apply this formula. F into S divided by S minus V, or else other formula also we can apply. Fixed cost by PV ratio, we'll get the same answer. But I am applying F into S by S minus V. Fixed cost is 3 lakh. Sales are 10 lakh. Sales are 10 lakh. Variable cost is 6 lakh. Now 10 lakh minus 6 lakh is 4 lakh. So 3 lakh into 10 lakh divided by 4 lakh. What I will do is, I will cancel the 5 zeros in the denominator and 5 zeros in the numerator. So it will become 3 into 10 lakh divided by 4. It comes to 7 lakh 50,000. So what we have calculated? Here BEP we have calculated. Now we have to calculate, it is asking you to calculate the BEP. Then PV ratio. Actually, I forgot to calculate PV ratio here. You can calculate yourself. So PV ratio means PV ratio is equal to C by S into 100. S minus V by S into 100. So S 10 lakh minus 6 lakh divided by 10 lakh into 100, 40%. The PV ratio you will get 40%. Margin of safety, profit by PV ratio. The profit is given in the problem 1 lakh. So 1 lakh divided by PV ratio 40%. So 1 lakh divided by 0.4, you will get margin of safety. So you do it yourself. I have calculated the BEP, you calculate PV ratio and MOS. PV ratio I told you 40% and MOS you will get 1 lakh divided by 0.4. So 1 lakh divided by 0.4 how much? 1 lakh divided by 0.4 you will get 2 lakh 50,000. So MOS you will get 2 lakh 50,000. That's all. Now come to 11th problem. Find out BEP and profit from sales of 40,000 when selling price is 5 rupees, marginal cost is 3 rupees. What do you mean by marginal cost? Variable cost. So indirectly it is saying marginal cost means variable cost. So variable cost is 3 rupees, fixed expense of 10,000. Easy problem. Selling price 5 rupees given, variable cost 3 rupees and fixed cost is 10,000. First we'll calculate the BEP. BEP in units. fixed cost by SP minus VC. Selling price minus variable cost. The fixed cost is 10,000. 10,000 divided by 5 minus 3, 2. So 5,000 units is the BP. Now BP in rupees. The BP in rupees is equal to BP in units into selling price. So 5,000 into 5, 25,000 is the BEP in rupees. First question we have completed. Now second question is asking you to calculate profit from a sales of 40,000. How much would be the profit if the sales are 40,000? Right? So first of all, we'll calculate PV ratio. The formula for PV ratio, C by S into 100, S minus V by S. So we have the selling price 5 rupees. 5 minus 3 divided by 5 into 100. We'll get 40%. So we got PV ratio 40%. So PV ratio, again we apply PV ratio. Ultimately we want profit. Finally we want profit. So this is a multi-purpose formula, PV ratio. By using PV ratio we can find out different things. So here PV ratio is equal to C by S. So in place of PV ratio I am taking 0.4. You can take 40% or you can take 0.4. You'll get the same answer. If you take 40 here, you have to multiply by 100. If you don't take 40%, if you take 0.4, don't multiply by 100. That is the difference. Now C, in place of C I am writing F plus P by S. Because I need profit. That's why I am writing F plus P by S. So 0.4 is equal to fixed cost. Fixed cost already given in the problem, 10,000. Plus profit, we have to find out profit. And sales are given 40,000. Now cross multiply 10,000 plus P. Divide, yeah, here denominator is 1. We are making cross multiplication like this. So 10,000 plus P into 1 is 10,000 plus P. 0.4 into 40,000 is 16,000. So 10,000 plus P is equal to 16,000. P is equal to 16,000 minus 10,000. If you bring 10,000 to RHS, this plus 10,000 will become minus 10,000. The profit is 6,000. That's all. This is the completion of the 11th problem. Now I am reading out the 12th problem. Suppose the break-even sale is rupees 10 lakh. Fixed cost are rupees 4 lakh. Compute contribution sales ratio. Sales per unit, selling price per unit if the variable cost are rupees 12 per unit. And thirdly, margin of safety if 80,000 units are sold. 3 different questions are asked. First of all, what is given? Break-even sales are given 10 lakh and fixed cost is given 4 lakh. So BEP in rupees 10 lakh, fixed cost 4 lakh. The first question, it is asking you to calculate the contribution sales ratio. Remember, contribution sales ratio is nothing but PV ratio. This is the other name of PV ratio. We can call it as PV ratio or we can call it as contribution sales ratio, no difference, name changed, right? So PV ratio is equal to how much? That's what we are finding. Remember the formula of BEP. By using the formula of BEP, we are going to find out PV ratio. So BEP formula is BEP in rupees is equal to fixed cost by PV ratio. How much is the BEP given in the problem? 10 lakh. In place of BEP, 10 lakh. Fixed cost is given in the problem 4 lakh. Divided by PV ratio, we don't have PV ratio, we have to find out PV ratio. So now we'll make the cross multiplication. See here, if I make a cross multiplication here, then BEP into PV ratio, fixed cost into 1. BEP, here I make the cross multiplication, not here, here. Now, 10 lakh into PV ratio is 10 lakh PV is equal to 4 lakh into 1 is 4 lakh. So PV ratio is equal to 4 lakh. This 10 lakh I am taking it to the RHS. So divided by 10 lakh because multiplication is here. Multiplication will become division. So 10 lakh in denominator. So 4 lakh divided by 10 lakh you will get 0.4. So one answer we got PV ratio 0.4. We can call it as 0.4 or we can call it as 40%, means same. If you want the percentage, multiply by 100. 0.4 into 100, you will get in percentage, 40%. First question completed. Second question, what is the selling price per unit if the variable cost is 12 rupees? If variable cost is 12, how much would be the selling price? We use the PV ratio formula. I told you PV ratio formula is a multi-purpose. By using PV ratio, we can find out a number of things. So here selling price we have to find out, we can use PV ratio. So PV ratio is equal to C by S. In place of C, I am writing S minus V because I need selling price, right? PV ratio just now you have calculated 0.4 is equal to S minus V by S. Selling price we don't have, but variable cost is given in the problem 12. In place of V, I am writing 12 divided by S. Now I am making a cross multiplication like this. So what will happen? 0.4. 0.4 into S. Not this. Here I have to make the cross multiplication. So S minus 12 into 1 is S minus 12. 0.4 into S is 0.4 S. Now bring 0.4 S to LHS and take 12 to RHS. So this minus 12 will become plus 12 and 0.4 will become minus 0.4. So S minus 0.4 S is equal to 12. S means 1S. So 1 minus 0.4 is 0.6. So 0.6 S is equal to 12. S is equal to 12 by 0.6. You will get 20. So what is this 20? Selling price per unit. That's what it is asking. So selling price per unit 20. Last question is, what is the MOS if 80,000 units are sold? What is the margin of safety? When 80,000 units are sold, what is the total sales? What is the selling price per unit? Just now we got 20 rupees. So actual sales is equal to 80,000 units into 20 rupees. You will get 16 lakh. 16 lakh rupees is the actual sales. And the MOS formula, margin of safety is equal to actual sales minus break-even sales. The actual sales are 16 lakh and break-even sales are 10 lakh. BP sales are here given. So 16 lakh minus 10 lakh, 6 lakh rupees is the margin of safety. That's all. Now 13th problem. Problem number 13. Given PV ratio as 40%, profit is 2 lakh and sales are 10 lakh. Calculate fixed cost, variable cost, BP and MOS. The 4 items we have to find out. What is given? PV ratio 40%, profit 2 lakh, sales are 10 lakh. We have to find out fixed cost, variable cost, BP and MOS. One by one we will calculate. First, by using PV ratio, we can calculate the fixed cost. What is the formula for PV ratio? C by S. So PV ratio is given in the problem 40%. So in place of 40%, I am writing 0.4. If I take 40, then I have to multiply by 100. I am not multiply by 100, so I am taking 4.5. In place of C, I am writing F plus P. Why I am writing F plus P? Because I need a fixed cost, right? So F plus P by S. So F we don't know, but profit is given in the problem 2 lakh and sales are given in the problem 10 lakh, right? Now cross multiplication, F plus 2 lakh rupees, F plus 2 lakh is equal to 0.4 into 10 lakh. You will get 4 lakh. So F is equal to 4 lakh. This plus 2 lakh, if I take it to the RHS, minus 2 lakh. So fixed cost 2 lakh. The first answer we got. Now similarly, we need the variable cost. Same formula I will make use PV ratio formula. So PV ratio is equal to C by S. In place of C, I am writing S minus V. Remember contribution, we can take F plus P or S minus V. Both are contribution, right? So S minus V I am taking because I need variable cost. So 0.4 is equal to sales are 10 lakh minus V divided by 10 lakh. Now I am making a cross multiplication. 10 lakh minus V into 1 is 10 lakh. If I make it cross multiplication here, 10 lakh minus V into 1 is 10 lakh minus V. 0.4 into 10 lakh is 4 lakh. 0.4 into 10 lakh is 4 lakh. Now take this V to RHS and bring 4 lakh to LHS. This 4 lakh will become minus 4 lakh. So 10 lakh minus 4 lakh, 6 lakh. V. So V is equal to 6 lakh. Variable cost we got 6 lakh rupees. 2 items we got. Now break-even point. The formula for BEP, fixed cost by PV ratio. We have the fixed cost and we have the PV ratio. Simply substitute. Fixed cost, just now we have calculated fixed cost 2 lakh rupees. Divided by PV ratio. PV ratio is given in the problem 0.4. So 2 lakh divided by 0.4, 5 lakh rupees. That's all. We got the BEP. Lastly, we need the MOS, margin of safety. The two formulas, actual sales minus BEP sales or profit by PV ratio. So I am taking profit by PV ratio here. The profit is how much? Profit is 2 lakh. So 2 lakh divided by PV ratio 0.4, you will get 5 lakh rupees margin of safety. That's all. So we have completed 13 problems in this CVP analysis. So if you are satisfied with my lecture, give a like to the video. Share my channel among your friends, among your circles, so that more students can watch the video and enhance the knowledge. Give your comments. Subscribe if you have not yet subscribed my channel, and buy the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.